All right, so I'm live currently on the trade on gold. Now I'm about to take a second entry. Let me just quickly share the live with my community. All right, so I entry to my group, my signal group. So this is the second entry from this order block right here, because that's where we have the first. So stop loss just below this low. So I'm targeting this high right here. So that's 1/6. Maybe I'm just going to share it now. All right, so what's the entry? So that's 0402. Okay, that's 4702.46. I gold entry 4702.46. Stop loss at 4691, right? That's 4691.49 or 0.52. 4691.52 TP TP1 three times your risk, and then TP2 will be 4773.50. Right, sent it. So after I share this, I'm gonna quickly explain how I got this entry. Trying 5. All right, so while I'm placing it, let me go over and so it's not even New York session yet. We're still we're at the bridge between New York and Ishan session, the Ishan and sorry London session actually. We're not yet London session. Right. This one. Let's see. Let's see what this turns out to be today. I'm already in this first entry right here. So all right, so I'll briefly so I'm done with placing the trade my reasoning the idea behind these trades. All right, so we are price is retracing. We're seeing retracements. All right, so let's see. Do we retrace to this point? We'll find out. So wait, I'm waiting for price to get to trigger the second entry. But let me give a brief explanation into why I'm currently buying the for let's start from 4 hour. So yesterday, Monday we had came down to sweep liquidity, this liquidity, right? Swept this low. Now I was expecting that price was going to keep selling further, right? But I was watching, and then we had a sweep of liquidity rather than a run, right? Price swept the low, immediately rejected, showing was likely going to reverse direction, start buying back up again, right? But there was no opportunity to enter in on the buy. Whenever price sweeps a low or a high, always wait and observe for what price does after that. And the daily candle yesterday, we entered the market because actually initially we've been within this daily demand zone. It's a fair value gap, but the fair value gap has been mitigated multiple times. It has been mitigated already by price when we had this within this area as a means to gain momentum or to gain volume for the buys for buy continuations. I'm very well bullish on gold. Still waiting for buys. I'm still very bullish, and I've been waiting for price to take out this high right here, and then after we take out this high, the next target, the next objective will be this high. Hopefully, price does not just suddenly gain momentum and head for this high without giving us an opportunity to enter. So back to the 4 hour time frame. Now, usually whenever time frame, I usually enter from the 4 hour time frame, but when correlating time frames, I also watch to see if the time frame higher than my confirmation time frame flow legs or a structure for me. Now, before this order flow leg right here, we had this after the sweep of liquidity here, we had price create this bullish order flow leg, right? And we had this fair value gap. Now, this kind of structures, price doesn't just go into the fair value gap, it still reach into the order block. This is the order block here, very long order block, but price reached into it, and then we had the rejection. Now, based on the fact that irrespective of how the structure looks, this the demand zone on this move confirmation time frame naturally will be the 15 minutes, and that's where I I observed and watched for confirmation for this first buy. Now, this is the week of the candlestick that entered into the demand zone on the 4 hour demand zone, the 4 hour PDRA, right? And then we had price dig into it, and then we saw displacement. This was displacement, and this displacement is proof that price at this level and price wants to start buying. And so, naturally, my point of interest on this was the mitigation block right here, the mitigation block right here. That's where I took my entry from, and then my stop loss just below this low, and that's why I took the first entry from this bullish order flow leg. Also, that price creates low high, and it finally starts creating higher low, higher high. So we've had higher low, and that has created a higher high. So what I'm expecting for price to do on this second entry is just come in here and create a new higher low to take us and keep creating the higher high. Now, my entry model, I have my one thing that is very important to me is scaling into my trades, making sure that on opportunity I get, I'm making as much as possible on it. But I'm not doing it. I approach it uh, without discipline. I approach it. I have a structured in and stacking trades. And previously, I used to take as much as 3 entries, 4 entries on a single trade. But I have realized over time that 2 entries that will be protected whenever price is moving in a certain direction. What I mean by that is because I was facing a problem where I could take the first entry, take the second entry, take the third entry, and the fourth entry, but discovered that before price gets to the targets, price usually would come and take me out, sweep liquidity on my fifth entry, right? And but while protecting the second and the first entry before continuing in this direction, right? And that's something that I've seen play out over time, and it's made me realize that 2 entries, most times of 2 entries are the protected entries on any trade. And so all I'm saying, I'm very optimistic and very all the signs are there. All the signs are there. All the signs are there for the signs are there for a buy on gold. Let's see how this turns out today. So this is my approach to trading. I play the risk to reward game. I play I play the risk to reward game. So in the chat, let me know what instruments you're looking at today. What instruments are you trading? What markets are you trading? Are you looking at today? What markets are on your watch list? So what instruments? If you're just joining the stream, uh, let me know your name and where you're streaming from and what instrument. What instruments are you trading today? What instruments are you looking at next? So I only trade gold. So, but I'm they are currently trading it, and I just want to take a look, just so I don't pay attention to my trade to the trade I've got gold. USD JPY. Welcome, Emmy. Okay, so I will. I'm coming. Let me. After when I'm done with this AUD I will of USD JPY. But what's your bias? What's your bias on it? Where do you think USD JPY might be heading today or this week? AUD JPY. I think this could be right here. This period low that rejected from this fair value gap could be inducements, because even coming from the fair value gap, actually has not created any proper order flow leg on the daily time frame from that. So this could be inducement for us to come to this order block right here. In this is daily, right? So if I go down to 4 again, I think this is why we see price ranging since this low. Good, we have this other block here though. That price currently rejected from price rejected from this, but then could not price has not been able to break structure. So we purely just been having ranging price action. Yeah, consider this not as inducement but as a shift in market structure. This could If we consider this as a shift in market structure, because did we have a candle close below it? We actually had a candle close below and it happened on this candlestick that got into this other block right here. So if we consider that as the market structure, or market structure shift, we could consider that we could look at price as already turning bullish. This was the supply that sponsored this is the supply that sponsored the sale. The sale that shifted structure here, and we've had price come back into it. And more so, we even had a sweep of liquidity. Price created inducement. We had engineered liquidity here. A price swept before finally going into the supplies on the other block there. Is looking we are looking bearish more and more. And okay, so this is on the 4 hour time frame. So let me check the 15-minute time frame for any confirmations for entry, for to enter purely by confirmations. But let me observe the 1 hour time frame first, though. Okay, beautiful. So this is the displacement from this order block. We had price create this bearish order flow leg here. Although we've not taken out this low again, but it's still respectable. We have price creating a lower high right here. So if I should go to the 15-minute time frame, if I should go to the 15-minute time frame, this is this is it right here. This is it right here. So this is the order block right here that price came back into, and we've been going down for itself since. So I'm actually bearish on AUD USD. I'm seeing reasons to support. If you although for me, if I actually traded AUD USD, I'd, I've already missed my opportunity, my window for entries already. But although we are not yet in London, it's not yet London session. So let's could have volatility, volume enter the market and shift downward. But taking this sale, what target be? Overall target is this low here. But target would be this low closer here. So let's say we are taking the sale. Stop loss just below this high. Right. Targeting this low. So that's this low. This low ratio 3.5. If we're targeting this low, this is 1 ratio 4. And if we're targeting this low, this is a 1 ratio what? 1 ratio 5.47. It's nice risk to reward. But I don't trade phone. USD JPY to sell from the weekly FVG on confirmation. Let's open the chart of USD JPY. So I'll start from the weekly time frame. Targets. What are our targets? So I think I analyzed USD JPY previously on a session, a weekly session review session. All right, so we had this was the last order flow leg, right? We had this price creating higher low, higher high right here. All right. Okay, let's eliminate possibilities. I'm seeing possibilities for a sell as well as possibilities for a buy. But let's slowly eliminate possibilities so we can decide which is more likely. All right, so that's the sell side liquidity, and this here is the buy side liquidity. We've got sell side liquidity. This is sell side liquidity and buy side liquidity, and obviously currently we are heading towards this buy side liquidity, which actually will lead us into this bearish fair value gap. And so that's why I said I'm seeing possibilities for a sell and for a buy. So slowly through top-down analysis, we're going to eliminate the possibilities, which we're going to try to eliminate possibilities for buys and sells until we have one bias having more possibilities than the other. So coming down to the analyze this, please I placed an entry there before. All right, so this is where price got into the weekly demand zone, right? We had a sweep of liquidity within it, right? Price induced, and then started seeing the buy. Price started buying upward. Started buying. All right, and created a yeah, currently this looks to be a bullish order flow leg that price creating, because if this daily candlestick closes like the way it is, we would have this fair value gap that price has created right here. All right, so I'm seeing I don't like markets where I see 50-50 price action possibilities supporting both biases. Let's see what we can do. At least for now, we know that our targets currently day trades is this high right here. It's certain that even if price is going to get into this fair value gap and sell from the supply, it's certain that we are going to come for this high firstly. So let's find setups that could take us into. All right, so we are now price since this week started. I think this started since this week, right? Okay, this was last week. This was last week. Since price came into this weekly. Now see something. This demand zone came from the weekly. So normally confirmation time frames should always be two time frames lower than your time frame where you have your point. So two time frames lower from the weekly time frame is the 4 hour time frame. And so we see price creating, we had this displacement out of it, and then we see price retrace down, created this first order bullish order flow leg, which is a well, this price created higher high. So if our target has been this high since last week, this high has been the target, right? Last week, if I was trading USD JPY, this is first buy entry. Stop loss just below this low here, this high right here. This is a 1:3.02, right? So if I was trading if I traded USD JPY, this would have been my first buy. This right here, my first buy, right? Then price gave a second entry. My trading system allow I always like taking at least two entries on whenever I'm trading in a certain direction, especially if it's a long trade, a kind of swing trade. If I'm targeting swings, right? So we had price create higher low, higher high, higher low within this point of interest, then higher high, right? We had a break of structure. Other flow leg right here, left behind the fair value gap. This is a breakaway gap, and for breakaway gaps, on my channel, I think I've made videos explaining types of fair value gaps, so you can check that out if you don't know what breakaway gaps and retracement gaps are. But this is a breakaway gap, and breakaway gaps will trade from blocks, right? So this would have been my second entry from this other block right here, and if I was PY, my second buy would have been from here. I think week's price action, if I'm not mistaken. It's this week. That was yesterday. Price came into this point of interest yesterday. Right. Our target still being this high. So this is a 1:3.18. This is a 1:3.13. Overall, could have at this point price is already at 5.8 or 5.9 already at like this. Right. So last week and this week on USDGPY, if you're only trading USDGPY, you would have made a 1:6, add a 1:6 trade. If you risked, meaning that if you risked $100 on this first entry, you're making $300. $100 on the second entry, you're making 300. My method of stacking is that whenever I get the second entry, I move my stop loss from where it used to be to where the stop loss for the new entry is. And so this automatically becomes a 1:19, and this becomes a 1:3. And so I'm risking less. Rather, if let's say we're risking $100 each on these two trades, at this point I'll be risking, let's say, around $120, $130 instead of risking $200 on both setups. But this is what I see on USDJPY. I doubt that price is going to retrace anymore to give us a new buy entry. I doubt, because if price retraces again, there is no, from what I can see, I can't see any supporting point of interest. Traces from here, it just means that buyers they've lost their strength, lost whatever momentum they've had. So at this point, we are heading straight into these eyes to take out this eye. And what happens from that point is still unknown, because if we are weekly time frame, on the weekly, we are coming from a weekly demand zone right here. And so naturally, if we are coming from the swing eye of this move is up here. And so if we are coming from this weekly demand zone, right, and so it is likely that we disrespect whatever sell structures or sell points of interest are on this. If could happen if going by respecting the trend that we are already seeing, right? If we are bullish, what could likely happen is price comes into this fair value gap, or let's say it even trades into the other block. What that might for retracement, not necessarily a reversal, possibly. And what I see here on the daily time frame even supports it, because on the daily time frame now we bullish other